And we've seen a big change in our national debt over the last few years since the pandemic. Not just because we borrowed a lot more money, because our interest payments have gone up. For the last decades or so, before the pandemic, the United States government was borrowing money at very low interest rates. It's called near zero interest rates, but very cheap interest rates. So we were able to just keep borrowing and borrowing money and not having to worry about the interest payments too much because the interest rates were so low. But then what happened was inflation. Remember, post-pandemic, we had this super high inflation. Well, to fight that inflation, in 2022, the Federal Reserve Bank started raising interest rates. And this raising of interest rates obviously made getting a mortgage more expensive, getting a car loan more expensive, but it also made our national debt more expensive. Because when the government goes out and they borrow money, they used to primarily do 30-year loans, like a 30-year mortgage. Well, that started to change a number of years ago, that they started to do shorter term loans because they could get a cheaper interest rate on shorter term loans. So the government started doing 1-year loans, 2-year loans, 3-year loans. And now these shorter interest rate loans now have to readjust. And as they've been readjusting at the significantly higher interest rates that we have today. Which means not only has the government borrowed so many more dollars, not just over the last few years, but over the last many years. They borrowed so many dollars, but now these dollars have a higher interest rate, which is why our interest costs have skyrocketed.